Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options US Market Update. In today's update, we will be featuring the stocks that you see on your screen right now. And remember, if there's a particular stock of interest, you can go right to it using the chapters feature on the video. All right, taking a look at the S&P, you can see that not a whole lot happened today, but based on the bar, we opened traded a little bit higher and then closed near the low of the day. That's not really what you want to see when you end up closing at the end of the day, but we are at the 10, 30, and 50-day moving averages, so we're all sitting right there together. Yesterday, we had finished where the high touched the 10-day moving average and the low touched the 50-day moving average. And we said, all right, well, we're going to have to go one way or the other, either break above the 10 and perhaps we move higher, or break below the 50 and perhaps we move lower from there. We did have a little bit of economic news. There was a survey that came out that talked about how there's so many apartments getting built that rents are likely to come down. Obviously, housing is part of the inflationary concerns. I can tell you where I live, they are building tons of multifamily apartment buildings, a lot more than they are single family homes. So thought maybe that might give it a little bit of a bounce, but didn't work out that way. But certainly will affect the numbers. We're going to talk about oil a little bit later on too. That has the opposite effect. One of the things that I did want to cover here is interest rates, as we always do. Got to pay attention to what's going on in the bond market, and thought we were getting a break there, which is probably why we finished near the low of the day on the S&P, because we finished near the high of the day on rates. So we had opened, we had rates move lower, but then they turn and move back. So rates finished near the high of the day, market finished near the low of the day. That's why I keep harping on the fact that you need to at least pay attention to the bond market or have some sort of a working understanding of the bond market if you want to be a good equities trader. So you can see the low, tap the 10-day moving average, and then move back to the upside. So we kind of have a little bit of a triangle formation here on the TNX, and it's not too dissimilar to the formation that we have over on the S&P as well. You can see that there's a little bit of a triangle formation right there also. So it's not a great triangle, but it's showing consolidation, and we're just waiting on the market to give us the next move. Are we heading towards that wave 5? Are we rolling over? With the triangle, we could go either direction. As you know, with Elliott Wave rules, triangles rule the day. You pay attention to those more than you do anything else. Now let's take a look at the dollar. We actually talked about the dollar in Tuesday night's TradeFinder. You can see how the dollar is moving big to the upside. Curious as to why that's going on. Is it telling us that there's some concern globally about the economic weakness around the world, because the dollar is viewed as the bastion of last support? Is that what's happening? Is that why there's a bid in the dollar? And the question was asked during TradeFinder. And by the way, if you haven't joined us for TradeFinder, please do so. We do it every Tuesday night at 9 p.m. Eastern Time. We check the markets, we look for trade ideas, and we have a live Q&A. And during this week's Q&A, during TradeFinder, somebody asked about oil. And with oil moving to the upside significantly like this, is this going to put a hurting on the inflationary numbers and cause the Fed to maybe have to rethink pausing potentially, and is going back and forth on the Fed fund futures on whether they raise one more time or not? So we've got two things balancing each other out, right? We got the housing that looks like it may come down, be a little bit deflationary for the numbers, but then we have energy moving to the upside. Are they going to balance each other out? Is one of them going to be more than the other? So there's some uncertainty as to what the Fed may do. But this chart of the USO is pretty darn impressive, moving to the upside. A bit vertical, so perhaps we need oil to rest a little bit. It has consolidated here over the last few days, right in this tap box, time and price projection. And if you're curious about this software, it's from the Hub Financial Group. We just did our live show over on the Hub Financial channel. To me, it's the best Elliott Wave software that exists out there. One thing I wanted to bring up, and we do appreciate when you make your comments on these videos. It's helpful. We've had a lot of fun with the Chuck Norris thing the past couple of weeks. We got to get to 40,000 subscribers, so please hit that like button or hit subscribe, because once we get there, we're giving away 4 of our level 3 alert services. And so you get directional, sideways, non-directional. It's a great package that we have, and our performance has been pretty darn good. So you want to have an opportunity to do it, but we got to get to that 40,000 mark first. So keep the comments coming. Anyone that enters a comment is registered for the drawing once we hit that 40,000 level. So when we're back here looking at oil in this consolidation here, what I wanted to say about the software is in the comments, sometimes people say, well, I don't agree with how you've labeled the Elliott Wave patterns. And I just wanted to clarify, I don't personally label these. The software does. And it is programmed exactly to Elliott's algorithm as he wrote it. No personal adaptation. So it's the Elliott Wave algorithm that is labeling these charts, not my personal choice, because there's other softwares out there that are personal adaptation. So if you're looking for a true Elliott Wave software, this is it. You can find out more about it over at hub.com. All right, so let's see if oil takes a break, if it gives back some of that vertical move, and it's not going to feel too good at gas pump for a while. As you know, when oil goes up, it seems like the gas prices go up the very next day. Perhaps we come down and test this 75 level, or maybe we're just going to consolidate and continue higher. If we look at the DMI on oil, that's a pretty good looking DMI. In other words, that's supportive of oil moving higher from here, with that ADX breaking above 20. It's about to break above 25, which is a little more of a conservative target on the ADX, but good separation between the 2 directional indicators. So I don't think we're done with oil moving to the upside just yet. Looking at some of the other markets here at the U.S., there's the DIA. And again, you can see they got kind of a triangle type formation here. Again, everything is just wait and see, where do we go next? And especially when you look at the DIA, we have support there at 340 and we have resistance at 350. And so we're just kind of in this range. If you wanted to include this high up here, you could go a little bit higher there. But nonetheless, we're in a bit of a trading range with this triangle formation right in the middle. We're going to get a break at some point. Don't know which direction that's going to be, especially when you look at the DIA, because the wave 5 could be finished, which means that we should come down to that previous wave 4. We got close to it, but usually those levels get touched. And so a break to the downside probably goes to that wave 4. If we break to the upside, perhaps we take out the wave 5. So spend a little time on the DIA, because I think it's really a good synopsis of what's going on in the market in general. Well, with that chart of rates, it looked like earlier in the day they were going to be a little bit lower, but finishing near the high of the day. Still, we had a little bit of a bid in the Qs, and I think this is why we didn't get a bigger bounce out of the Qs, because rates did reverse intraday. So perhaps we were going to get some sort of a bigger move to the upside, but when rates turned over, just a little bar there, we closed that little tiny gap that was created in yesterday's move. And so here we sit with another triangle here. So the triangle is the word of the day. We're getting consolidation in all the markets and waiting for some sort of determination as to which way we go. Now you look at this and you say, well, the Qs are in a wave 5 pattern, but the 4 has been labeled and it's only at that 23.6% fib level. So we could break lower here and label the wave 4 perhaps down here in this area around 340 if we get a significant downward move, and that would bring that wave 4 in the 61.8% range, which is a pretty strong fib level. So I'm just giving examples of where things could go, and if we break to the upside, we probably take out that wave 3, and then perhaps we're off to the races up towards that wave 5. Kind of a lot more information next week. Likely by the time we chat again with the update next week, we will have had some sort of a move out of these triangle formations. Now, the one that's not in a triangle is the IWM. That one's pretty ugly. Rested a little bit today in this area of consolidation right there around 185, and you can see that we're not too far from that 180 that I thought we were going to test back here in the middle of August. We didn't quite make it, but we went up and tested 190 and got turned back. So when we had the break above 190 over here, setting the wave 5 above that wave 3, another concern, another wave 5 that didn't quite exceed 100%. So you look for a move back towards that wave 4 there. And as some people pointed out, not just in TradeFinder Tuesday night, but in our insiders meeting last night, which is for our alert subscribers at ewotrader.com. And when we give those away, you'll be invited to those every Thursday night. We have an extended Q&A there. Looks kind of like a head and shoulders pattern here on the IWM. And so if you're one that looks at the IWM or the small caps as an idea of risk on, risk off type of scenario, that's making you nervous, because if we come down and break that neckline at 180 with that head and shoulders pattern, we could be looking at significantly lower moves on the IWM, probably at least coming down to test this area of support back at 170. So the other patterns, all in triangles, an ominous pattern here in the IWM. The VIX back down to 13. So here we are, and every time we come down to 13, it seems to bounce. You see we touched it back here on September 1st. We didn't quite make it back to 17, which is what we've been doing, bouncing from 13 to 17. This time we didn't make it up to 16 before now we're back down at 13. So if we do break below 13, break that 61.8% wave 5 we've been talking about for so long, now that could give ammunition for the market to move higher from here. But we also have to be concerned about another test of 13 with a bounce higher, and that would be negative for the markets, obviously. Taking a look at Bitcoin, and when we look at Bitcoin, it's just stubbornly hanging in there at 26,000. Remember when we were saying that, yeah, this was a nice move to the upside here, but we always had to keep in the back of our minds that we went vertically there, and usually vertical moves get retraced. It did. So here we sit right back at this 26,000 level. That's pretty much where we are at the time of this recording. Now we have to look at, all right, well, if you were concerned about that vertical move back there in the middle of June, what about this one here that occurred in March? We did give some of that back. We created this descending triangle pattern. Triangles break out, and we had the upside breakout. But now we're right back down to the point of the triangle. That usually happens as well. So all this is classic Elliott Wave stuff. Triangles break out. Usually you go back to the breakout point, which is what occurred. Can we hold this 26,000? If we don't, then yikes, that's a Katie bar the door scenario there, because then we're looking at a move back to 20,000. There's just nothing in the way there. Yeah, I don't think Katie can keep that barn door shut if we break below 26,000. That was such a quick move from 20 to 26. I know nobody wants to think about Bitcoin back at 20,000, but we have to be aware of it, just like we were with what was going on in June. Everybody always wants to know about Coinbase. Get asked that all the time during TradeFinder, and we're holding in there. But look, a doji on the chart today. So what is that going to mean for next week? The wave 4 is right at that 61.8% level. Perhaps that can hold. It is positive that we're back above 80. That's key, barely. But we did break below it and managed to get back above it. And so hopefully we can hold this 80 level on Coinbase. If not, there are other support levels here, so it's not the end of the world. There's support there at 70, and then the next level would be down here with some consolidation around 60. So we kind of have some 10-point stair steps that occur there on Coinbase. But if you're long Coinbase or want to be long, you want it to hold this level here above 80 and try to make a move to the upside. We are above those major moving averages, the 10, 30, and 50, but they're all right at one spot. And again, that is giving us the confirmation that the market is consolidating, Bitcoin's consolidating. When all those moving averages converge to the same spot, it tells you things are consolidating. All right, well, silver. Going back to that chart of the dollar, when you have a big move to the upside like that on the dollar, that's not going to help you create a bid in SLV or GLD. And so we had this big move. The dollar gave us a little break and we gapped up, and it looked like, gosh, maybe we've missed this move on SLV. We've been waiting for a bid to come into the metals. Nope, we're right back down to 21. Didn't miss a thing. And that's why you don't chase these vertical moves. So look what's happened. Every time we go vertical, here we had a nice zigzag to the downside. That completed, and then we went vertically up. Things go vertically up, they often come right back down, and it did. We went vertically up again and right back down again. So that's why you see these rules that we talk about all the time. I don't like vertical moves. Let's see if we can't get the dollar just to kind of calm down a bit, maybe drift lower, and we can get a tradable move out of SLV where we move in more of a 45-degree angle, which is a lot easier to trade, a lot more comfortable to trade. Then you get these big vertical moves and you have to be concerned about those corrections right back down. Let's see if SLV can hold 21. If the dollar calms down, perhaps that can occur. But if the dollar continues its upward move and we break 21, we're probably looking at least 20 and perhaps all the way down to 19 here on SLV. So as I've been saying for a number of months now, the correlation between the dollar and metals is strong. So you got to watch what's going on with the dollar if you're interested in trading the metals. Apple in our stocks of interest, gosh, that one's been in some news lately. We had this big move to the downside here with comments of concerns about China with Apple. So that gave us a big move lower. Don't often see that kind of stuff, but we did back here. So unusual. Following this big, nice, long rally that we had in Apple, we had this vertical move down, went right back up, filled that gap, and now we've gone vertically down again. We did get a little bit of a bounce today because there was some analyst upgrades. So the analysts were taking a look at this and felt like maybe that's too far, too fast, moving back down. So a little bit of a bid in Apple today on the analyst upgrades, maybe trying to pick a bottom here. We're kind of in no man's land. I think 170 looks better, but you could make a case that consolidation right there around 172 or 3 seems to have held so far and had held yesterday and today with this move back up. A little bit more fills that gap, and then who knows where Apple goes from here. But yeah, the China news definitely popped the balloon, if you will, on this big move to the upside in Apple. So a lot of concern on the financial networks of can the market turn and go back to the upside with this kind of weakness in Apple. But again, if we can hold support here, perhaps we can start to build something back to the upside on Apple as well. NVIDIA. I was asked about NVIDIA on our live show today over on the Hub channel, as well as in the TradeFinder meeting, wanting to know when is it time to try to step back into NVIDIA. We had this little pop-up here on the news that they were working with Google, and we couldn't really add to that. So we hit 500. I've often talked about how those round numbers kind of act like the old tractor beam effect from Star Trek days. You just kind of get drawn to those big numbers, but then they also act as support and resistance. And in this case, 500 acting as resistance. We've moved back down. We look at the 10-day moving average. We're below it, but still above the 50-day moving average. So I think if we take a look here at where we are with NVIDIA, if we can hold this level right here around 440 and stay above that 50-day moving average, perhaps we can try to make another run. We do have that wave 5 that's in the tap box. So the algorithm does like that 580 price at some point in time. It doesn't mean we have to run right there, because we already have this 5 here. We need to break above 500 and move that wave 5 to get up there. So this trading range here, I think as much as everybody wants to try to trade NVIDIA, this might be a good time to just sit on your hands here. Sometimes the best trade is no trade. Let NVIDIA tell us what it's going to do. Can it break above 500, or is it going to break below 440? If it breaks below 440, then we know where we're going to go back to that previous 4. And that's that round number down at 400. Don't even really want to talk about this gap over here. I don't see that unless really all hell breaks loose in the markets. That gap will get filled one day, but I don't think it's going to be anytime soon. Gaps get filled a high percentage of the time, but not always immediately. Sometimes it takes some time. But the level to watch here is 440. So I think you keep an eye on whether or not NVIDIA breaks below, because that's the 50-day moving average, again, 440 or above 500. And that's when you can look to step in either long or short on NVIDIA. We hadn't talked about Tesla as much lately. You kind of look at this and say, well, we're holding that 61.8% fib level on the wave 4. My favorite of all fib levels is 61.8 is a really strong one. And then you take a look here at 240. And as long as we can stay above that, we seem to be okay. We look at the moving averages. They're all converged, just like we've seen all over the charts. A bit of a quasi triangle pattern. It's not the greatest triangle, but there's a little one here. And remember, we were talking when Tesla was running up, and I said, Elon's telling you, they're shutting factories down, they're updating the automation, et cetera. And the next quarter is not going to look so good as far as production numbers. Does that cause Tesla to break to the downside from here? That 61.8% level is a tough one to break. So even if we broke to the downside, we might find some support there. But if we break to the upside, perhaps we're looking towards the following quarter and maybe some greater production levels out of Tesla, and we can move higher. So we're going to see some significant moves out of these favored stocks as well as the market here in the not too distant future, if not next week, within the next couple of weeks. And we couldn't finish today without talking about India. My goodness, the chart of India is just amazing. I think it's the strongest of all the global markets right now. If you're looking for a place to put some money that's bullish, you'd have a hard time doing better than this chart of the INDA right now. And then we just had the news. If you wonder what's this gap to the upside, they're Biden and the head of India talking about working more together. A lot of manufacturing has moved from China to India, and they're trying to expand that and work even more together economically. And so that's what put that bid into the INDA today. And it's hard to imagine that we're not going to go up and hit that wave 5 target there. We did break that wave 3 high, so we labeled the 5. We are a tiny bit overbought here. So, maybe we consolidate right above that wave 3 at the beginning of next week, but a great looking chart there. On the INDA, I actually did a webinar for some folks in India last week, and they're pretty giddy, as you would imagine, pretty positive on their market and excited about how well it's been performing. So I thought I would highlight that, as well as give you an idea of why we had the pop to the upside today. So everybody enjoy your weekend. Appreciate you spending some time with us, and we will look to see if by the time we talk again next Friday, we've got some breakouts and more information on where the market goes from here. Take care, everybody. These recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.